welcome back to Good Seed Investing. In today's video, we're talking about one of the most widely used technical indicators in the world of investing, moving averages. So what exactly are moving averages? Well, in simple terms, a moving average is a line that is plotted on a chart to show the average price of a stock over a specified time period. It's a way to smooth out the ups and downs of a stock's price action and help identify trends. There are two types of moving averages that you need to know about: the simple moving average, or SMA, and the exponential moving average, or EMA. The SMA is calculated by adding up the prices of a stock over a specified time period and then dividing by the number of periods. The EMA, on the other hand, places more weight on the recent prices of a stock, making it a more sensitive indicator. I will show you live examples of this in the Webull platform shortly. So why should you care about moving averages? Well, for starters, moving averages can help you to identify trends in a stock's price action. If the stock is trading above its moving average, it's generally considered to be in an uptrend or bullish. On the other hand, if the stock is trading below its moving average, it's generally considered to be in a downtrend or bearish. In addition to helping you identify trends, moving averages can also be used as support and resistance levels, which we talked about last week. So if you haven't seen my video on support and resistance, please feel free to go back and watch that one. But let's continue here. So, okay, if a stock is trading above its moving average, the moving average can act as a support level, providing a floor for the stock's price. On the other hand, if a stock is trading below its moving average, the moving average can act as a resistance level, providing a ceiling for the stock's price. In conclusion, moving averages are a simple yet powerful tool that can help you identify trends, provide support and resistance levels, and help to narrow down entry and exit points for buying and selling. Now, let's jump over to the Webull platform so that I can show you how to add this indicator to your chart and a few examples of some of the moving averages that are most popular that I use and most, investors may use in their trading. So let's go ahead and get over it on Webull. All right, guys, so we're back on Webull, and I'm going to show you how to add these moving average indicators onto your chart on the Webull platform. So we're going to come up here to edit indicators. We're on well, first of all, we're on a SPY chart here. It's a weekly chart that we're on. And remember, the SPY tracks the S&P 500. It's an ETF. And so we're going to go ahead and add 3 moving averages that are typically used by investors or traders. And that's going to be the 20, the 50, and the 200-day moving average. Okay, so I'm going to go ahead and go to edit indicators. And MA stands for a moving average or a simple moving average, as we discussed. There's also EMA, which is your exponential moving average, which, remember, that tracks prices that are more recent. But we're going to stick with the simple moving averages today. Most traders, I would say, or investors use a simple moving average. And so we're going to go ahead and click on the box next to the MA. And then, as you can see, we have 3 different columns here. We have inputs, style, and introduction. We don't need introduction. Introduction really just tells you what the moving average is if you wanted to get a definition for it. But we're going to stick with inputs and style. So inputs is where you actually input the length of time that you want to have your moving average for. So again, we discussed the 20, the 50, and the 200. So we already have a 20 here. We have a 50 here. And we need to go ahead and take out this 120 and change that to 200. So now when we go to style, we can check off the ones that we want to actually add to our chart. So we have the 20 checked off, we have the 50 checked off, and I'm going to go ahead and check off the 200. I'm going to change this color to purple, though. Let's make it green so it's just easier to differentiate between all 3. Okay, so we now have 3 moving averages checked. We want to click done, and as you can see, our blank chart now has moving averages or lines plotted on the chart. Okay, you can also see over here on the right, or excuse me, on the left corner, that it will let you know if you forget which colors you chose. So we have the yellow is the 20, the blue is the 50, and the green is the 200. A lot of your short-term traders will use a 20 or a 50-day moving average as an indicator. And if you're looking to invest longer term, you're going to probably use a 200-day moving average as an indicator or as a way to identify buying and selling opportunities. So let's just take a look and see how this is playing out in the chart. Of course, because we have the 20-day at yellow, it's following very closely to the price action into the candlesticks because it's a shorter time frame. The blue one is a bit further away because it's a longer time frame than the 20. It typically, well, it will lag the 20-day. And then of course the 200 will lag the 20-day, the 50-day as well because it's a even longer time frame. It's calculating 200 days of price action. This is calculating 50 days of price action. This is only calculating 20 days of price action. But you can see how this can identify spots where you could actually enter a stock. For instance, here is a spot where it's now the 50-day as well as the 20-day is showing as support. And from that point, it has gone on an uptrend. Now you can see also inversely where it dropped below the 20-day moving average and didn't go, all the way down to the 200-day moving average, but it did kind of consolidate around this 50. So this is a spot of kind of confusion where we don't know where buyers or sellers, which one is going to win. So this is not a place where you want to get in. This is a place where you want to just watch. Now, a place where you could have gotten in as far as an entry or to sell the stock, actually to get out, I should say not to get in, would have been here. Remember the doji being a reversal indicator. And then we also see that the candlesticks are falling below the 20 and the 50-day EMA. This has now become a downtrend. It was an uptrend for a very long time. And then all of a sudden, sellers started to step in. And now we're in a downtrend. We're below the moving averages. Now we're still above the 200. And again, that's for a longer term trade or a longer term investment. But just to give you an example of how this looks on the chart, if I were trading the stock, places that I would want to enter would be here, 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 as it's bouncing off. And places I would want to exit potentially would be in this area, and here we're just kind of waiting to see, because at this point you can see it's back over the 50-day moving average. It's not over the 20-day moving average yet, but the 20-day looks like it's actually going to come back up and cross it. So another thing that we'll talk about in later videos is when moving averages cross over each other. When a smaller time frame moving averages crosses over a larger time moving average, typically that's a bullish signal, and that kind of happened here where it crossed over, the 20 crossed over the 50. But that's something we'll get into in more depth in a future lesson. I just wanted to show you guys how to plot these indicators on your chart. And if you wanted to hide these, for instance, if you don't want to see them for whatever reason, you can go here. There's a little eyeball you can click and it will actually hide the moving averages. If you click it again, they come back. If you want to edit these, you can click on that indicator next to it and it will bring that same box up. If you wanted to switch over to EMA versus MA, you could also do that as well. So if I just really quickly want to show you EMA, take off the MA, and we'll leave the 20, 50, and 200 as we did before. And now our colors are yellow, blue, and green. Actually, I'm sorry, we're still on the EMA or MA. Let's go to the EMA. And we're going to change our inputs once again. 200 here. We already have the 20, the 50, and now we have the 200. Style, we'll leave the lines as they are. Doesn't really matter. Click done. And as you can see, they kind of follow very similar to the simple moving average. It just may hug a little closer because it's taking into account more recent price action. But as you can see, it's not very different from the simple moving averages. So hopefully this helps you all to get a visual of what moving averages look like and how they may be used to identify trends, whether that's bullish or bearish, as well as identify prices to enter a stock and prices to exit a stock. If you have any questions, please feel free to drop a comment below. I will also drop a link for Webull. If you guys want to open a brokerage account with Webull, there will be a link in the comments where you are able to get up to 12 free stocks. So certainly go ahead and take advantage of that. And I will see you guys in the next video. Thank you again for watching. Don't forget to subscribe.